This week's dip in memory stocks might be one of the most memorable buying opportunities for your portfolio. Today, we're taking a full 7-minute deep dive into the giants powering the AI revolution. We're looking closely at Micron, SanDisk, and SK Hynix, 3 companies that are absolutely critical to the global AI ecosystem. These are the foundations of modern data intelligence. While the recent pullbacks have caused alarm, it's critical to look at the broader context. These stocks aren't just reacting to news, they're reflecting a massive shift in how the world processes data. The fundamentals for memory technology are stronger than ever as AI demand surges globally. Some investors are starting to panic with the deep losses we're seeing, but history shows these stocks are up significantly over the last 2 years. Is this a collapse? We believe this is just natural market mechanics. It's about profit taking and locking in gains ahead of what's expected to be a very strong second half of the year. This pullback is often a healthy reset. Investors who stay focused see this as a strategic entry point for the next leg up. Let's start with Micron. MU is exceptionally well positioned to accelerate its growth as the AI supercycle intensifies. We're seeing unprecedented demand for their HBM products. Micron is leading the charge with significant breakthroughs in memory density, ensuring they have a competitive edge as large language models grow in complexity and size. Their technical innovations are reaching new technical peaks. While SK Hynix currently holds the majority share, Micron is aggressively expanding its reach into data centers beyond the NVIDIA ecosystem. They are scaling fast. New facilities are already rising to meet this demand. Look no further than their recent earnings. They delivered a massive beat on consensus estimates, proving that the underlying business is firing on all cylinders. Revenue is up 34%, outpacing many peers in the semiconductor space. Micron's profitability is on a trajectory that outpaces many of its peers in the semiconductor space. This isn't just growth, it's high-margin, sustainable leadership. Next, we move to SanDisk. Their story is a masterclass in the legacy pivot, moving from consumer tech to enterprise infrastructure. They are a powerhouse. Large language models require memory that can handle immense throughput without latency. This is where SanDisk's enterprise SSD solutions become indispensable for the modern data center. AI requires massive, persistent storage. The numbers are staggering. SanDisk has seen an annual growth rate of over 3,200%, highlighting the absolute necessity of their hardware today. This shift to being a critical AI enabler is why institutional investors are flocking to the stock. They are providing the physical memory that allows AI to function and scale at an enterprise level. The analyst community is catching up. Major firms like Wedbush have recently boosted their price targets, signaling deep confidence in the future. Analysts believe management has actually been conservative. If they're underestimating their own production potential, the upside for investors could be substantial. Technically, the indicators are starting to align for a rebound. We're seeing clear convergence in the MACD, a classic signal of selling exhaustion. Finally, we have the heavyweight, SK Hynix. They are the undisputed leader in HBM and the inventors of the technology making AI possible today. With a 60% global market share, SK Hynix is essentially the sole supplier for the most advanced AI chips. If you track NVIDIA, you are essentially tracking SK Hynix's ability to produce at scale. The big story right now is their recent US listing on the NASDAQ, raising billions to further accelerate their production and technical lead. The IPO was 7 times oversubscribed, a clear signal from the world's largest institutions that they want pure-play exposure to the most critical components. Demand is sky high. The CEO has gone on record stating that HBM shortages will likely persist through 2028. This is a structural imbalance that guarantees sustained demand. Their technology is filtering into everything from consumer electronics to wearables, broadening their revenue base and diversifying risk globally. They are becoming more than just a chip maker. Their tech is integrated everywhere. While US coverage is in its early stages, the global consensus is a strong buy. Institutional money is expected to push valuation higher. Price targets for the US listing suggest over 100% upside from these levels. For those with a long-term horizon, this current volatility is likely just a small blip in a massive growth story. Upside potential is massive. Targets suggest over 100% upside. In summary, fundamentals remain incredibly strong, demand is real, revenue is growing, and these companies are reinvesting at record levels. Concerns about the pullback are moot when you look at the heat of the HBM market. The disconnect is exactly where the opportunity lies. The AI supercycle is in its middle innings. While processors get the headlines, memory remains the most critical enabler for the future. Keep watching. We want to hear from you. How are you playing this correction? Are you adding to these AI giants? Join the conversation in the comments below. Thanks for joining us for this deep dive. Stay informed, stay bullish, and we'll see you in the next update. Good luck with your trades. Stay ahead of the curve with our daily insights. Subscribe now and never miss a catalyst.